Well, hello everybody, welcome to the Strategy Lab video. My name is Alexander Nikitin. I'm a professional trader and a developer of pattern search software. And in today's video, I will check my new idea of stop loss placement in Cipher patterns. What is this idea? Suppose we have a Cipher pattern. Let me draw it this way. Okay, here's the Cipher, something like that. I could draw using a triangle, I suppose. Here's the Cipher pattern. Let us stretch the Fibonacci's from here to here. So simply measure the distance toward the 618. Like this. It is 38, and half of that would be your stop loss. 19 is half of 38. You see that? So it is set to stop loss. Well, that's it. Let me show you the software that I use. It is MPS Pro. It draws patterns on history. -1 means check all the history. This algorithm is small, but I can choose between small, medium, large, and extra large. And only Cipher is displayed here. Cipher. No butterflies, no bats, no godlies, only ciphers. So this one displays small, medium, large, extra large, and this one is needed to draw manual patterns. To draw patterns manually. Let me disable auto scroll. Let us start. Here are the ciphers. I have prepared Excel spreadsheet. This Excel spreadsheet should be formatted as text, and we will type the result this way. If the price action hits the target of 618, it is marked as plus. If it doesn't hit 618, it is marked as minus. If it doesn't hit 618, but before that it hits rate 2, it is marked as -0. And if it hits rate 2, then comes back to entry and then goes to targets, it is marked as +0. So the 4 variations of price actions are marked this way. And then we will do some calculations. So let us start then. The first cipher we opened below the entry, then we went and hit the stop loss. It is obvious loss. $yen 1 hour is the time frame. Here, let us see. Here, you see that 1 pip, it didn't hit, it didn't close the targets. Yes, but in this case, I do what? I just simply do the break even. When we have that kind of situation, I just do the break even. So 0 trade, 0 result, 0 trade, nothing here. This one, we hit trade 2, then went to stop loss, it is -0. Going next, the bullish one. Bullish goes here, then to here, and then a bit lower. Didn't touch stop loss, it went to 618, it is plus. Going next, the bearish one. When I have 2 of them in line this way, yes, the 2 algorithms almost coincide, I just take the largest. So let me take the largest, starting from here. No, it is the smallest. From here. Hit trade 2, went back to targets, then didn't hit 618, so it is -0 as well. Going next page, this cipher, this one. Okay, obvious winner. Going next, nothing here, nothing here. we can hit this entry. No, didn't. Okay, this larger cipher looks this way. Didn't touch this stop, you can see that. 50 and then returned back and then came back to 61A, so this means it was plus 0. This price action. This one had stop loss touch and reverse. Sometimes happens. Kiss of death. Going next. This cipher, the larger one. This smaller one. Let me check if it was invalidated. X to A to B and C and D. The smaller one was invalidated. This is very large. Let me check it once again. X to A to B to C and D. Oh no, it was not invalidated. So first I take the smaller one. Here it is, go into stop loss, and then the larger one. The smaller one goes to stop loss. And the larger one, triggered here, goes lower, lower, lower. Doesn't hit straight to, but in this case, as I told you, when we simply do not hit the straight to by few pips, 1 pip, 2 pips, I just do the break even of this trade in case it reverses and I stay 0. Pretty simple rule that is avoiding some of losses. If I have 0, I don't have anything, so it's not no first target closed, nothing, so it's simply no trade. The same as no trade, should not be calculated. No result. Going next, this smaller cipher first was obviously a loss, minus. Then this larger cipher is the second. From here we triggered here 50, then go to stop loss, it is minus 0. Going next. Nothing here. I suppose nothing is here, but let me check. X to A to B, going to C, and D point is here. Well, it is valid, yes, even with this strange C point. Not enough to do the break even. You see, obviously it is very far from the targets, so it is a stop loss. Going next. This one is a pure stop loss. Going next. This smaller one, let me see if it was invalidated. Like this. No, it was valid. We first had this reaction, not enough to do the break even. Second reaction, not enough to do the break even. And this one was a stop loss. Let's go next. This larger one. Let me draw the pattern. X to A to B to C, and C point goes even further to C to D, like this. Well, yes, the pattern was valid. Even after exceeding the C point, it was still valid, and it was 3-2 only, so that's why I type minus 0. Okay, this one is obvious loss. Going next. What is this one? Okay, it is a loss. Nothing here, nothing, nothing. Obviously winner, pretty clear situation. Obvious loss, very simple. Going next. Nothing here, obvious loss with this smaller. And this larger one, let me zoom it out, didn't trigger. This bearish looks this way, going higher, higher and higher, not enough to break even that, going higher and higher, exceeding stop, so it is a loss. Obvious loss, and the previous didn't trigger loss. Taking the largest as usual, so it was a loss. $24. Page down. Find more trades. Obvious winner, but I think straight to only. Yes, straight to 50 and go back. -0. Next, what we have next? Nothing. What is this? Okay, let me check it. We didn't trigger here, we did trigger higher. And look at the price section, we spike that, we didn't hit the stop loss first, then we go all the way down, and then next candle we continue going down. With this spike we hit in the take profit of trade 2, and then go to stop loss. So it is -0. -0 is only trade 2 winner. Taking the largest, only the largest, not both. Trade 2, then come back to entry, and then go to 618. It's +0. Next, obvious winner. Next, okay, taking the largest, obvious loss. Didn't trigger. Let me type it. Nothing. Loss. Good. Nothing. Here, another loss. Obvious winner. Let's measure. What is it? 3-2, 618, I suppose. Yes, 618. Next, didn't trigger, invalidated. Didn't trigger. Let's check this one. No valid. Obvious winner. Next, what was this in the bottom? This one is a break even. You see few pips didn't touch the trade 2. It is simply break even. 0 trade here. Okay, going this to this to this and this because it exceeds. Yes, it is a valid pattern. You see it was drawn and it is a 618 winner. Let me check that. Yeah, it was a 618 winner. When you do those market research and you practice those patterns, you actually train your eyes, and your eyes become very, very precise in measuring the ratios of the pattern. Okay, it was obvious winner. The secret is in practice. Practice and practice. Didn't hit that. Obvious loss. Didn't hit that. Okay, it was pretty far away from the entry. It's obviously not that few pips. That's why let us see if we've been triggered here. 31 and 30 exceeding that entry. Obvious winner. You have to decide what is far away and what is few pips for you. Maybe dollar yen 1 hour 5 pips will stay few pips. Maybe 1 pip. You should set your rules. I do that visually, and for me it is a big distance if compared to the whole cipher. If the cipher were a bit larger, extremely large cipher, then maybe this distance would be calculated as the few pips distance, depending on the size of the pattern relatively to that. Okay, what is this? A loss. And again, guys, it is a practice. You should practice stop loss. To train your eyes. The situation, take the largest. I don't take this the first. With this stop loss, I take the largest that has higher stop loss, the largest pattern. 382 and then go to whatever, -0 winner. Let us continue. Going next, nothing here, invalidated, obvious winner, but let's see if it was a 618 winner. No, it did, -0. Okay, next, obvious winner here, this touch and reverse, and the second smaller winner, but we will calculate it a bit later. First I need to type down this result. What is this one? It is only 50%, so it is -0. Going next, down, page down. When I press page down, I just go to the next page of the chart. This way. Some MT4 tips for you. Let me check this larger cipher, bearish one, from here to here to here, and go into the lowest. This one is the lowest, potentially completed here, but it was invalid. And this smaller cipher looks this way. Didn't hit the stop loss, you can see that. Stop loss is slightly less, so we didn't hit that. Go into 382, then come back. Does not touch that. Entry level, you see that? Doesn't touch. And then go to 618. It was a 618 winner. Very precise stop loss placement. Okay, touch and reverse. going higher, obvious winner. Going next, touch and reverse as well. This is plus. 47 trades done. 2002, since 1999 towards 2002. How many years already? 3 years passed. 3 years backtested. Pretty fast, yes? I won't do that standard thing of backtesting 5 years. I will find at least 100 trades. At least I will try to find 100 trades if there are any, before my chart comes to an end. Okay, what is this? It is a butterfly pattern. X to A to B to C, like this. You will have a pattern? No. A loss. We only have a loss. Next, next, page down, page down, page down, a loss. Type it in. Next, page down. What was that? Potentially it is a loss. X to A to B to C goes a bit deeper, and then goes here. No, nothing here. Page down. We can see this potential trade 2. Yes, it was a trade 2 winner only, and then went to stop loss. It is -0. Okay, nothing, nothing, nothing. Obvious winner, yes, flawless victory. Plus, obvious winner, again, plus, page down, this one, obvious winner. We didn't touch the stop loss, go to this, come back, does not hit the break even. It is full target winner. Full targets. Both targets. Okay, this exceeds too much, but let me check. X A to B. Once again, the chart moved. X to A to B to C, and going here. Can the cipher be drawn this way? Yes, yes. It can be drawn this way. And it hits straight 2, goes back, and blah blah blah. And the second one is obvious winner. You see spiking through entry and going lower. Okay, so we have -0 and plus. Let me type 2. Trade number 54. It's not trade number 54, I started from position 2. This means trade number 53. Okay, let me check this one. The C point was slightly exceeded. But it may stay within the rules. No, no valid. Page down, no, nothing with this, nothing with that. Another cipher needs to be checked because the C point was exceeded. C to D. Yes, it was valid, but it hit stop loss before. nothing here. Oh, I need to check them all. The first smaller bearish 50%, this means -0. The second larger bearish, this one, it is 50% as well, another -0. Bullish, smaller, medium and larger, no valid. And I would look at this one. My eye is looking at this, pretty obvious. This way. It is a valid cipher, but I suppose it didn't trigger, but who knows. Yeah, it did trigger. Look at this. Oh, going to the upside. It is a winner, a larger winner. Okay, going next. I just deleted those manual drawings, and automated drawings were redrawn. Okay, thread 2 going next, going back, and potentially we hit break even. No, we didn't. So it was plus, full target winner. Going next. Okay, next. Let's find the number of the chart, number of the bar. It is 80.44.6. 80.44.6. Let's go to our indicators and release some RAM. 80.44.6. Not to analyze all the bars, not to scan them all. Control C. But only start from this position. And this way it will work a bit faster. Okay. Okay, patterns redrawn. I will check the larger one a bit later. The smaller one is an interesting situation, from X to A to B to C and D. Maybe? Yes, but it didn't trigger. You see? Never hit that. The larger one, if we stretch it from here to here, this is the entry. Yes, let us see. It triggered. Then it went here, then it went there. Didn't hit stop loss, you see, and went to 618. So it is +0. It could be a 618 winner, but we break even that. That's why it is +0. Okay, a winner, but yes, it is +0 winner, I suppose. Yes, 3-2 break even +0. Next. Okay, +0, maybe. Yes, 3-2 back to break even, but then to plus. +0, 62 trades already. Oh, pretty fast. Okay, going next. This one, obvious loss. Next. Nothing. What is this? Something here. Maybe 3-2 before. Nothing. Nothing. You see that it is too wide to be calculated as few pips. The few pips rule, it is too wide from here. A bit closer, and yes, I would break even the trade, but this one is too wide. Let me check. That's why it is a loss. this larger one, you see, from here to here to here. Obviously, if we start from this, it would be better. No valid, and let's start from this. It was valid, but went to stop loss. Good. Look at this. 6 money. The calculation part is the most interesting one. We first need to collect some data. Look at this, it was probably 6 money winner. Yes, it was a 6 money winner, but before that, no, we didn't hit 3-2. Okay, it was simply 2 target winner. Good. Next. Maybe look at this, X to A to B to C to D. No, nothing. This one, potential 3-2. Okay, here you can see that few pips rule, so that's break-even trade, not a loser, but nothing. Nothing should be tagged in, as if we had nothing. Okay, 3-2, 6 money winner. Maybe it will be good to calculate the few pips as a distance, let's say, of a quarter of average true range, 25% of average true range, if you wish to calculate that. Let me show you what is the average true range. It is this distance, you see that net, and if you take a quarter of that, 20%, it is 30, maybe even less. You should have left 5 pips of that. Here's the average true range, you can see that. Here's the 0.38, so maybe in the middle from here, 20% of average true range would be good. If you have something, if you want to have something dynamic within that pips, and depending on the large cipher, smaller cipher, you can see the average true range. Or maybe you will stretch it this way and say, you know what, this is enough to be the stop loss. Yes, so just enable that. Go to Fibo properties, a level of additional level 0.05 to be your offset level. Oh no, it is too large. Then go to 0.03, like that. Let's do it very strict and rule based. 0.03. So with this large pattern, no, even better. 0.01. Let's be it this way. 1% of this. Okay, pretty good. Cool, yeah? So if you stretch it this way, like this, come on. You let's suppose you're stretching the targets from here to here, yes? And you see that it didn't hit the entry by that level, 1% of that. And you can also set the offset for 3.2. It will be 370, 37, 0.37. Offset for this and offset for that. 0.372, 1%. Didn't hit 1%. So this is the offset for take profit. You see, if it hits this offset, you do the break even. If it hits the take profit, then you choose the take profit. So you see 1%. And the smaller is the pattern, the smaller is the offset. The larger is the pattern, the larger is the offset. Understood the idea? But I do it visually on my eyes. Maybe 1.5 will be the best situation, but 1% is good. 1% is good. Nothing triggered here. Just some tips for you how you may do it. It's not mandatory. You shouldn't always follow my recommendation, of course. Here's the rules for the offset. You see, target was below the offset, so the few pip rule doesn't work here. We did have that, and it is a loss. If it did hit the offset level, then I'd say, well, it simply a pattern that didn't complete. Maybe I need to make it a bit larger. Half. A bit larger. 0.1 half. And another half is here. 36.8. 36.8. So 1.5%. The offset is 1.5%. Okay. Let me recheck that. This is obviously not the situation here. Yes, you see that offset didn't hit, and this one is the for take profits. Going next page, down. What is this pattern? Maybe it was invalidated. If I start from here, X to A to B to C, and go in here, valid. If I stretch the fibs, okay, stop loss. Seems invalidated for me. Yes, it is. Let's look at those. You see, price starts consolidating, and pretty many patterns are found in consolidation periods. Didn't hit that. It was 50, and then came to stop loss. So it is -0. Then this one was something here. Was 3.2 and then went to 6.1a, and this means +0 because it came back to break even here. You see, if you made your trade break even, of course you will close the position having 0. Obviously invalidated the smaller, and the larger one potentially didn't trigger. I think it was, oh no, it did trigger, hit 6.1a, perfect. Cipher is one of the most accurate patterns if compared to Godly, Bayat, Butterfly. This smaller pattern is a loss. Larger one never completed. Nothing. These situations, these patterns. Let's take the first trade first. The small trade. Offset rule doesn't say it was this. Okay, it was a stop loss. The small trade stop. Large trade in revenge. Triggered. 16.20. Yes, it did trigger. It's been plus. Stop loss followed by a winner. Immediate recover. C and D. nothing valid. Smaller cipher potentially hit the targets. Let us see if it was not invalidated. The chart moved, so I have to redraw that. What is the highest here? Oh, it is the highest, and it is valid. Yes, I just thought that this was exceeding that, so when in doubt, double check. Still in doubt, stay out, or get out if you were already involved. No, and it then exceeds the pattern. The smaller one. X to A to B. What if we exceed C point this way? And nothing happens. This means we have invalid pattern. Only valid patterns are traded, those that fit the ratios rules, ratio requirements. Nothing. No, it doesn't hit the offset. Yes. Minus. Next, what is this one? X to A to B to C to D. Nothing valid. Okay, obvious winner, like a waterfall. Slightly exceeded the entry but never hit the stop loss and fell like a waterfall. A stop loss. Minus. Going next. What is this? Here's that situation. We hit the offset. Let's zoom it in. If we really did hit that, hit the offset, and that was 0 instead of winner. You see that? That was 0. No trades. Let me adjust my targets. We didn't hit the offset. You see? We didn't hit that. Then we went lower, didn't hit stop loss, and then went to targets. Oh, it should be marked as a winner. What happened here? We never hit the entry, and that was the offset rule. Yes, you see that? In case price hit the offset, then it went to targets, and then it came back to the entry, you stay away, you don't enter, because targets already were made earlier. So that was offset. Next, just wait for another pattern. Patterns appear again and again and again, so don't worry that you miss one. This one is 3-2 and then went to targets. This means plus 0. Nothing valid, nothing valid. This one is interesting. X to A to B to C to D. No. Nothing. Another interesting situation here. Let us check. X to A to B. Oh, it moved. X to, it moved once again. X to A to B to C and D. Yes, it was valid, so it was a winner. Exceeded here, but the larger one may be still valid. X, A, B, C, and going to D somewhere here, but nothing happened. This one obviously was a loss, but let's do this calculations. Offset didn't hit, so it was not break even. Nothing here, a loss. Page down. I remind you that we set the offset as 1.5%. 1.5%. 1.5. 618. Target winner. Pretty cool. Going next. Invalidated here. Then it validated here. All of them it validated. This one was a loss. Minus. Next. Okay, let us see the offset rule. First of all, this is not offset, yes? Then it goes here. In case it hit that, then I would stay away. So I can enter at this, and again it doesn't hit the offset, so it was not break even. Simply loss. You can call it offset, you can call it front run or whatever. Doesn't hit anything. Doesn't hit anything. Maybe front run will be a better word. It is a loss. Next. Nothing triggered. Obviously. Obvious winner. No stop loss, obvious winner. – 2009, 10 years already. 10 years. Can you imagine that? Backtested 10 years in a matter of some minutes. Maybe we already have an hour, but still. Okay, 382 winner. And then came back, and then nothing, and then came to stop loss, I suppose. Yes, so it was avoided loss, it was -0. Instead of stop loss, we hit 382. And the second one needs to be checked. X to A to B to C, exceeding this. And D point. No valid. The second was not valid. Need to check this one. X to A to B to C and go to D. Nothing happens, no valid. Okay, let us see if we hit offset first. You see that? Maybe hitting offset. 1.5%. No. So we just re-enter and we hit 380. When price comes back, we enter. Okay, nothing valid, nothing valid. No valid cipher. No, so many invalidated ciphers. So this should make you think about a stupid a stupid decision to enter at C point in hopes that it will go and complete the pattern. No, in the majority of cases it never completes. Obvious plus. The majority of patterns never complete. So if you buy at C, if you sell at C, waiting for D point to be completed. Sorry. It was 3-2 and then went to stop loss -0. Okay. Let's check this one. Two patterns coincide, two algorithms coincide, that's why we have them drawn twice. No offset hit, no break even, so we hit stop loss. Oh no, we hit stop loss. Oh no. Another stop loss here. Okay. I will teach you today how to calculate the expectancy of your program. Sorry, of your of your trade. Nothing here in the end of the program, in the end of this video. Okay, the word program is on my mind. Nothing. The expectancy. If you didn't watch the previous video, so wait for this video till the end, and you will find how to calculate the expectancy. What is an expectancy? Is actually what you are to expect placing your trade. This is minus. If the expectancy is positive, this means that you will generate money trading the strategy. If it is negative, then you should drop this strategy, you should give it up, throw it away, because it is a rubbish. 3-2, go into stop loss, -0. Few trades left. 1, 2, 3, 5. Let me release some RAM. Oh, let's do it till the end. We have so small number of trades left, so it doesn't matter. Did hit the offset and then went to stop loss. The technical trading is based on statistical advantage, and if you have this advantage, you ought to exploit it. We call it edge, a statistical edge. So the statistical edge is actually the same as your expectancy. You simply multiply the probability of win on your average win and the probability of loss on your average loss, and then the first number you do the calculations, just detract the second number, and if it's negative, oh, valid trade triggered here to here, went to 3-2, then went to break even, no, and then went to 618. It was plus. I will find a bit more trades today. Okay, triggered. Yes, it triggered. 32618 as well. Next, I suppose never triggered that. 2012. Okay, minus 2013. the small one is a loss, the large one is a winner. A loss, a win. But let us check. First of all, trade 2, then came back to entry. It is plus 0. Plus 0. Okay, that's enough. Let us do the calculations. First of all, before we do the calculations, we have to calculate our average win versus our average loss. And if we use, let us go here. And let's do that this way. For example, we use 618 target only. 61.8 target only. The next approach is to use 382 target only. And the next approach is to use 61A target, but when it reaches 32, do the break even. Yes? Okay, you have to do it yourself. Type it in your Excel spreadsheet as well. What we will need: total trades. Total trades. Then we will need winners. Then we will need losses. Then we will need percent of win. Then we will need percent of loss. And then we will need expectancy. And here, somewhere in this, we will need this. Largest win, smallest win. Because of target adjustment, we do that. Average win. If you guys don't know, we do the target adjustment when price exceeds the D point, the reversal point. It doesn't reverse exactly at that point. We re-stretch our Fibonacci's. Let me show it here. So initially we place the take profit here, agree? Like that. So it is initially. So this is the largest amount of our take profit, but because price action goes higher, the take profit goes higher as well, and we have smaller amount. So this is 96.0. Let me type it in parameters. 96. Okay, now it coincides exactly. So let's calculate what is the reward as compared to our risk. We will calculate our risk as 1, be it 1%, be it $1, be it $100, it doesn't matter. And our reward as something multiplied 1, yes, if it is larger. Okay, so the 61A is 107 and 3 versus 54.0, and I bet it is twice larger because initially I set it as 2 versus 1. 107 and 3 divided 54.0, it is 1.98, but it should be twice larger. The measurement was not very precise. So the largest win is with this 618 strategy is 2. Okay, what is the largest win towards the 382 level? We measure that of 66.1 and this 50 what 54.0. 66.1 divided 54.0 divided 54.0, it should be somewhere around 1.23, 1.224, but it should be 1.23. Let me type it as 1.23, the largest with first target, yes. And of course here 61A, yes, it should be equal to 2 as well, because it is again 61A. The 382, only the largest winner is that. Okay, what is the situation when we have the smallest winner? Fibo properties 94 49 49.8 49 8. But instead of 8, 7. 1 decimal of a pip lower than stop loss. In this case, guaranteed no stop loss, but still, if price reverses here, we have targets. And let's calculate it. Uh, 54.0 is the stop loss. The target number 1 turns into 86.7. 86.7 divided 54.0. It is 1.60 and 55555. Let's round that 1.61. This is the smallest winner. And 1.61 here for 618 targets. Yes, the smallest winner. And let's calculate it for 382 targets. It should be this. 33.0 divided by that. 33.0 divided 54.0. It is 0.61. I know that it should be 0.618. But because of not very precise calculations, it is 0.61. Okay, let's type it this way: 0.62. 0.618 or 0.62 is the same, almost the same. But it should be that, because this one is 1.618 and this one should be 0.618. If we adjust that, ideally, I was just calculating to show you that those numbers coincide. So they should be this and this. If you have this being your largest target, so this should be your smallest target. If you have this being your largest target, this should be your smallest. Okay, so what is your average win using the 618? It is very simple, very simple. You need to calculate the average of these two numbers. You see? And it is 0.80 something, yes? And then you need to calculate that as well. 0.94 if you only place the 3-2 winner. You see that? Average win of this, average win of that, average win of that. Or risk to reward, because we consider our stop loss being always one risk. So this is 1.8 of that risk, and this is 0.92 of that risk. If it is 1%, so this means 0.92%. Or if it is 1,000, it is 0.92 of your 1,000 of your risk. If you risk 2%, so this means 0.8 multiplied 2. Yes, the risk is 1. Let's calculate that risk, and it should be 1, 1, and 1. Whatever is your 1. And then, depending on your risk, your reward equals 1. It equals 1 multiplied this ratio, average ratio. So it can be this. So if your 1 equals let's say 3,000, yes, then your reward is calculated as this, this, and this. Your average reward based on those ratios. If your 1 equals to 2%, yes, so your reward is this, this, and this in percentage. Hope you understood that. Yes. Okay, let us then set this as 1 back. Set this back as 1. Total trades, how many trades we have to calculate this? It is control shift downside. Oh, we have some missed. Let me delete the line. Type nothing. And go here, 102 for this trades. 102, then we go 102, And for this, it is a bit different. 618 plus break even, it looks this way. Format and filter. We should only calculate those that are not zeros, because if you have 0, this means that you actually had no trade. When you have 0, it is equals to having no trade. 77 trades with this. 77 here. Okay, let's calculate the number of wins with 618 target only. So what is a winner here? We have this and we have this 618. We don't do the break even with this 618 only, we just wait until it hits 618. I just set 618 and do nothing else, only restretch the fibs. So how many winners we have? Let's count. 42. 42 winners here to hit 618. 42. Okay, let's calculate how many winners we have with 3-2 strategy. Yes, 3-2 targets. What is a winner? It is everything that is not a loss, everything that is not minus. It is 3-2. Okay, let's do the calculations. How many we have? We have 59. 59. 59. Good. And what is this 618 plus break even? They are only those, because zeros are zeros, we don't calculate them, we don't have them, and minus is stop loss. They are only pluses. 34. 34. Let's go to 34. Okay, now let's do the derivatives calculations. Derivative. It equals winners minus loss. Total minus winners. Perfect. 60 here. Okay, the percent of win equals winners divided total. Yes. Perfect. 57% to hit the first target. Let me do it. Percent this way. Okay, and the loss equals percent of loss. This divided total. Okay, now we have it this way. Now let's calculate the expectancy. The expectancy equals percent of win multiplied your reward, average reward, you can see that, minus percent of loss multiplied your risk. Is this, you see that? Okay, and it equals 0.15. Let me slightly have it this way. 0.16. This is your expectancy. Okay, what this means? This means that on average, every trade gives you back 0.16 of what was put as your risk. If it was $1, on average, every single trade gives you 0.16 cents. Every single trade, not winners, but every trade, regardless of losses, winners. Don't calculate that. If you had 20 trades, just imagine that. If you had 20 trades a month, calculate the number of total winners, calculate the number of total losses. Yes, gross wins minus gross loss, and whatever is net profit. If you divide that by 20 trades, what was your trade? What was your win on every trade? What was your net profit on every trade? So this expectancy calculates that. What is the win on every trade? So what are you to expect? If it is less than less than 0, sorry, if it is negative, then you are to expect your trade to be a loss. The strategy is losing money. You are to avoid that strategy. Okay, look at this. If you trade only second target, if you aim larger target, this is better than if you only trade the break even. Although the probability of hitting the second target is 41%, yes, well, the probability of hitting the first target is 57%, but you generate less, your expectancy is less. See that? Hope you understand what I mean. Okay, and with break even we have the phenomena of synergy, when you have the result that is much better than if you have separately this and you have separately this. What it means? It means that when price hits trade 2, you don't close your position, you just do the break even, yes, and let it run till the 618. So your expectancy is 0.24. Let's suppose we have 30 trades a month. 30 trades a month. So let's calculate our average monthly returns. Yes, it equals expectancy multiplied the number of that. So your average return is 4.6 of what you risk on every trade. So if you've been risking 1%, your average return of this strategy is 4.6%. Let me do it this way, 4.7%. If you've been risking 1%. If you've been risking always 1,000, so your average return, monthly return, is 4.7 thousand. Well, pretty good. 4.7 thousand every month. 4.7% of whatever you've been risking. Let's suppose we've been risking 2%. Yes, increasing that. So look at this, 14% monthly. If we've been risking 3% of account on every trade, so it is 14% here, 10% there, and 21% there. What if you will trade it this way? What if you place 2 targets and you open a position, and when the first target is hit, you close it as if it was a 3-2, yes, and then you break even the second. So you're actually using the 2 trades. First half of your position and second half of your position. First half of your position is traded this way, yes, just close at 3-2, and the second half of your total position is traded this way, as if you just do the 618 plus break even. So this would be your total expectancy, this plus this. Okay, let's do the calculations. So it equals this plus this. Your total expectancy is 1.06 on every trade, and your result will be calculated this way, multiplied this equals this multiplied your monthly results, 30 trades, yes, let's say it this way, 31. You see radical improvement, extremely radical improvement. Here it is. If you use 2 target strategy, or closing half, closing another half, and blah blah blah. 3% risk, let's turn it into 1% risk, and the same. This is the largest, so you just have pretty good number of winners, because 57, yes, closing that position is good for your probability thinking, it is good for your beliefs. Then you can simply not suffer those large drawdowns. You close some profits pretty often. You do the break even, you have winners, you have zeros, and then you have large winners. Okay, so and that is 10.6 return of what you've been risking monthly. 10% monthly. What is 10% monthly? Let's do the calculation. Let's say you have 10,000 account, and every month you multiply it by 10%. So this is 10,000. Let's start that. This is 10,000. And next month, this is month number 1. Let me do it this way. No, this is month number 1, this is month number 2, number 3, and so on. So let's type it here. No, it's not doing the calculations. Okay, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is a year. Let's do the calculation of that. You start that 1,000. What you have next month, you have what you have started from multiplied 0.1. Agree? Because of 10%. 0.1 and 0.6. Like this. 10%. This is your expectancy, monthly expectancy. If you do consistently trade in the same strategy. You see? Oh, no, not this. First of all, your account, and plus, because it is your winner, added to your account. This is what you generated, adding to your account. You see it this way? Next month, it is different. Let's do the numbers. Format, go to numbers. Let me close the MetaTrader. Go to numbers. This way. Okay, perfect. You see, next month it looks this way, and next month it becomes larger. You see? See this? Increasing. Increasing. You see? It is 335.0. And now let's calculate your yearly return. So if you suppose that this risky 10%, yes, let's talk in terms of percentages. 10.6 monthly, yes, and you need only to multiply it by 12, yes, multiply it by 12. Then you are wrong. Your 127 yearly return is not that, because every month you have a larger account growing, and 10% becomes more money. So this is your return. So this should be equal net profit is this minus what you have started from, yes, and it should be divided. It should be divided by your initial account. Yes, this is your net profit, what you have generated, net profit, divided by what you have started from. So this is your amount of that. This, you see? Not 127, but 235. Because of percentages. Increasing your amount every time. If you use 1%. Well, I think that's it for today. I hope you understood how to calculate expectancy, and what is more important, you understood how to exploit the statistical edge of a Cipher pattern. Regardless of what is the drawdown, of how many losses we have in a row, you see loss, 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 0, loss, 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 0, loss, 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 and blah, blah, blah. One winner, again, loss, loss, loss. Obviously, this is a drawdown from trade 8 to trade 32, but then it recovers. Obviously, it recovers because of that, because of expectancy. The expectancy is positive. It gives you an edge. You are to generate money. You are not losing money. And now I will reveal you the secret why most people lose money. Simply because they never did this work. They never know if the strategy they are trading have a positive expectancy. Why you may think of trading some strategy? Because somebody has written that on a website, because somebody has told you about this in your books. You never checked it with your eyes. You never do the research. That's why I'm creating those videos, backtesting workouts. Sometimes I call them strategy labs, or whatever videos. They are simply market research. You're just checking that statistical edge, if you have some, and what you might generate, what you should expect, what you should not expect, and then simply write down the trading plan. Place that trading plan side by side or in front of your eyes, and when you place a trade, read your trading plan and look at your chart, and if what is written in your trade plan coincides with your chart, place a trade. If not, then forget of that trade. You should have a rule-based approach. If you become disciplined with this, if you follow what is written in your trading plan day in and day out, you will generate money. What is this? 235% with this strategy that is really 57%. You don't have the strategy of 80, of 70%. You don't have it. You have 235% yearly return, placing that standard conventional two-target approach. Yes, 3-2 and 6-1-8 plus break-even. Well, what else should be added? I don't know. Still have doubts? Check it yourself then. Until then, good luck and good trading. Hope to see you soon.